Hello guys, welcome back to my channel. Here I am with another question on provision for depreciation. But in this case, we are talking about the sale or purchase of the asset with your given case of provision for depreciation. The point to be highlighted that in the exams, the provision for depreciation come along this method. The 99% cases there, if provision for depreciation question would be there, they would give you question in this pattern in which you have not to prepare the provision for depreciation for the machinery from the starting year of the purchase, whether you have to prepare the same from the continuing part of the machinery. Like over here, on 1st of April 2024, machinery account and provision for depreciation account balance is given to you. Balances are given to you. That means he has not purchased the asset, rather to balance brought down for the machinery is 8 lakh and provision for depreciation account carries 1,60,000. I have told you that provision for depreciation balance brought down would be on which side, that is on the credit side. This is an asset, that's why having debit balance. This is having a credit balance because it is shown in the liability side of the balance sheet. So that's why it is having a credit balance. So if I have to ascertain from here, what would be the balance of the machinery as on 1st April 2024, if I have actually to check out what is the balance of the machinery, that is rupees 8 lakh minus 1,60,000 provision for depreciation, what is the balance of the machinery, that is 6,40,000. In the limitations of accounting, you have studied one limitation, window dressing. What is window dressing? This is window dressing. You have shown your asset as a debit balance with rupees 8 lakh. But you escaped its actual value was rupees 6,40,000. How you escaped? Rather than deducting the depreciation, you showed provision for depreciation in your balance sheet as a credit balance. Everyone does not understand what is provision for depreciation, so that's how window dressing is done. Now, in this particular question, the question is saying that 1/4 of the machine was sold. So first of all, rather going to this particular question, I would like to discuss in a simple manner that what was the machinery balance actually as on 31st March 2025. You see, the machinery balance without depreciation we are discussing first. The machinery balance was 8 lakh as on 1st of April 2024. Right? He is asking me 31st March 2025 balance of machinery. Out of 8 lakh, he is saying 1/4 of the machinery was sold. You know very well, whenever we are selling something, it should go on the credit side because it is an asset. Asset is reducing. How much machinery you sold? We are talking here about book values, right? Which values we are talking? Book value, which was purchase value. 8 lakh, out of 8 lakh we sold 2 lakh, right? Then he says that as on 1st of July 2024, again a machine was purchased. Purchase should be added. How much was the value of machinery purchased? That is 3 lakh here. So now see, out of 8 lakh we sold 2 lakh. How much was left? That is 6 lakh rupees. Then we purchased 3 lakh more. So what should be the balance of the machinery? That is 9 lakh rupees. So in this provision for depreciation method, rather it is easy to prepare these accounts. How? Just in machinery account, you have to treat your book values, put your book values here for the given dates. What is the given value? 8 lakh, out of which he sold 2 lakh. He purchased again for rupees 3 lakh. And then what should be the balance of the machinery? That should be 11 lakh minus 2 lakh. It should be rupees 9 lakh. So this is the particular manner which we have to adopt here with a little bit changes. Now let's see what changes we have to make here. So first of all, he says 1/4 of the machinery was sold on 1st of April 2024. So sale of machine was with rupees, that is 2024. He sold the machine for rupees 1,20,000. And as the date of starting of the account and the date of your selling of machinery is same. So no depreciation would be taken here. In this date, we have to consider our sale value. It was sold for rupees 1,80,000, right? 1,80,000 was the sale value. But I told you we have to put a total of rupees how much here? 2 lakh. This is not 2 lakh. So how to make it 2 lakh? Let's see. 1/4 of the machine. 8 lakh was the worth of machine. 1/4 of the machine was sold, that means 2 lakh was the machine value on the date of purchase, and total depreciation, this is total depreciation on the machine was 1,60,000, out of which 1/4 was belonging to this machine. So 1/4 of the depreciation if belongs to this machine, how much is the depreciation belonging to this machine is rupees 40,000. So what was the remaining value of your asset, that is 1,60,000, right? This we also used to do earlier. 1,60,000 remaining value, which was sold for a rupees of 1,80,000, because we sold for a more value, so the profit on the sale was rupees 20,000. So this is the point which we calculated in our working notes. Okay guys, let's see how to show this here now. By bank account we have shown our sale value. But you know that 8 lakh rupees is total value of the machinery without taking for the depreciation. As for depreciation, we have prepared another account. So what is the total value of depreciation for the asset which we sold is 40,000. In total 1,60,000, there is 40,000 rupees of the depreciation which was on the sold asset. So this needs to be transferred to which account, that is machinery account, which date we are selling 1st of April 2024. This depreciation rupees would be transferred to machinery account. So by provision for depreciation account, how much is the total value of depreciation, that is 40,000. And what was the profit on the sale? The profit on the sale would be taken to the debit of your machinery account, profit and loss account, and in the bracket we will write the word that it is a profit on the sale with rupees 20,000. Now see, what should be the total value of the asset sold? 2 lakh rupees. See over here, 180 plus 40,000 is 1,80,000 plus 40,000 is 2,20,000. We have shown for the profit on the sale with 20,000. How much value we took into the account is rupees 2 lakh. How you have to take the value, again repeating, you will take out of the total asset value the sold value's depreciation. That depreciation you will take from here to the opposite, right? So in provision for depreciation word we write the word to machinery. In machinery account we write the word provision for depreciation. Then sale value of the asset. If it is a loss, it will be taken on the credit. If it is a profit, it would be going on the debit side of your machinery account, right? So this is the way we have done the sale. Now after that he says that on 1st of July 2024 we purchased another machinery for a valuation of rupees 3 lakh. So here the value of the machinery purchased is 3 lakh. Now you know very well that in a normal machinery account, as to calculate 31st March 2024 by balance carried down, to calculate the same we charge the depreciation. Now the depreciation is to be charged to which account? Here. So the date you put over here, for the same date you will write over here by depreciation account, as you used to write in your machinery account. Now how many assets are there? There are 2 assets. First asset, that was of rupees 8 lakh, sold for 2 lakh. How much is the leftover value of the asset? 8 lakh minus 2 lakh, the leftover value of the asset is 6 lakh rupees. So to calculate the depreciation on 6 lakh, there is which method followed? That is the 10%. So we use the asset from beginning till end on 6 lakh. How 6 lakh? 8 lakh minus 2 lakh asset was sold. So 6 lakh 10% would be 60,000 rupees that we took here. Inside we will take the total outside 60,000. Second machine that was purchased for rupees 3 lakh at the rate 10%. It would be the depreciation for per annum. But here per annum word is given, so we have to consider what for the months. From 1st of July. July, August, September, October, November, December, Jan, Feb, March. We got total 9 months from here. So 9 divided by 12. The amount of the depreciation would be 22,500. Right? So the depreciation we portrayed over here is 22,500 is the total depreciation on the newly purchased asset. So what is the total of depreciation? 82,500 here. Now make a total. This total comes 242500, 2,42,500. From 2,42,500 total we deducted 40. This total less 40. What is the balance left for the machinery? That is 2,20,500 rupees. That is the balance left for your provision for depreciation account as on 31st March 2025. So this is the balance of the provision for depreciation account as on 31st March 2025. That is 2,20,500 rupees. Now what is the value of machinery? Let's check from there also. It is 11,20,000 on debit side minus this total 2,20,000. So when out of 11,20,000 we are deducting 2,20,000, what is the balance carried down? That is 9 lakh rupees. So our 9 lakh balance matches with the rough used balance. I told you 8 plus 3 minus 2, you should get a balance of 9 lakh. So what is the value of the machinery without depreciation? 9 lakh. And depreciation on that asset is 2,20,500. If he asks me what is the balance brought down of these accounts, to balance brought down for this account is 9 lakh. As it is an asset would carry a debit balance 1st of April 2025, and on 1st of April 2025 the balance brought down for your provision for depreciation account is 2,20,500 rupees. And if the balance after depreciation is asked in the question, how you will take? You will take the value of the asset like 9 lakh rupees is the value of the machinery, and depreciation we took for the total of the machinery. So after taking it, we will get 6,97,500 is the value of the leftover machinery here. So this is how provision for depreciation account is to be taken in case of the sale or purchase of the asset. I will be coming along one more video regarding when your date of sale of the asset is not the same as of the financial year, and we will also discuss about how the depreciation account is treated or prepared in the upcoming videos. So thanks for the day. Accountitude, like, share and subscribe. Keep scoring.